So welcome to our webinar on strategic office relocation in central London. My name's Luciana. I'm going to be posing some questions to our panelists today. We are joined by commercial property expert Anthony Lorenz and the Lorenz Consultancy's head of agency, Andrew Knights. We are going to be discussing today the effect of the pandemic on the London office market and as many companies prepare to adopt this new model of working from home, what that might mean for the market. First question being, what is the impact on the use of office space during the pandemic and the subsequent success of working from home?
Well, it's very, very difficult to judge what the impact will be because we're only just coming out of the situation where people have been hibernating basically since March 2020. What we're actually seeing from research of 8,500 office tenants who we researched is that many of them, over 60% of them, said that more than 30% of their staff will continue to work from home, which does lead to downsizing. With the office inquiries that Andrew's handling at the moment, we've had quite a lot of people downsizing. We let 8,500 square feet in Dover Street on a downsize, and they're going to be taking 4,000 square feet. And I don't need to give you too many examples, but downsize seems to be the mode. They're also looking, without any shadow of a doubt, for plug and play offices, and that's going to be a situation in the future where even landlords who just did Cat A refurbs will do Cat A plus, including everything of the tenant's fit out, because capital is very hard to come by. There is going to be a surplus of secondary offices. The best will be in demand in the future, and we'll cover all these situations. And I'd like to pass it to Andrew, who will put a little bit of meat on the bone on that.
Yeah, I mean, obviously the last 9 months or so, there's demand for office space and people signing up to leases has been fairly short, but we've noticed over the last, I'd say, 6 to 8 weeks, a massive surge in activity and people out there looking. People have a better idea of what they're going to need going forward. But as Tony says, the trend at the moment is downsizing, and not just downsizing, but improving on the quality of their offices to entice staff back to work. So typically the working from home, I think, is here to stay to some degree, but the novelty of working from home 24/7 for the majority is disappearing, and people do want to get back into town. They do want to be spending physical time with their colleagues, and so I think it's going to be a very speedy recovery back to the new norm. It won't be necessarily Monday to Friday 9 till 5 anymore in the office. It will be this hybrid model of working, offering flexibility to staff and how they want to I suppose, run their personal lives alongside their work lives. But yeah, the downsize trend is certainly something that's happening. But then equally, the way in which we use offices is changing. That someone previously would take an office and perhaps fit as many as 18 people in a 1,500 square foot, 2,000 square foot office. I think now that the per square foot per head will increase, not necessarily just for social distancing, but for businesses to create social areas and quiet rooms and more meeting space in their offices, because there's going to be a much higher need for those sort of areas as opposed to just a sea of desks across a floor plate.
And the majority of people looking at the moment are actually looking to improve the quality of their offices, not only in terms with their layouts and fit outs, but also with regard to their safety of their staff is becoming paramount. And whilst greening was really put, somewhere at the middle of the list with regard to office demand, it's gone right up the list with regard to HRs are looking for absolutely top quality. So secondary offices are difficult to dispose of, and we've been advising a lot of tenants on disposing of their offices and put their space on the market, and actually have advised them in particular Hurst in Leicester Square. We've actually taken out their fit out and and redone it because it wouldn't have suited occupiers. And so there's a lot of advice in getting your premises ready to dispose of, because a lot of people can't move because they've got leases which go on, which haven't got break clauses, they haven't got lease expiries, and then they've got to get out of their lease simultaneously to actually entering into a new lease.
Okay, so what are your views on the offices then from the medium to long term?
The immediate effect is going to be the same as the layman's effect in 2008. Rents did go down by 32% over layman's. I'm not saying they're going to do the same again. We did 3 rent reviews in Queensbury House, Old Burlington Street, June 08, £102 a square foot, September 08, 78, and December 08, 68. So rents fell. But what happens is it's like musical chairs, and it's not dissimilar to the divorce market. If every couple was happy, there'd be no work for lawyers. Well, people aren't happy with their offices because what they had and what they want seem to be 2 different things. And so we're going to have a very busy market. But let's put it this way, when somebody goes round offices, they're usually looking at 6, 7, 8 buildings. They usually focus on 2 or 3 which could be of real interest. And it's not going to just be terms. The quality of the space, the top space is actually going to shift a lot quicker than space which is secondary, and I think there'll be a substantial oversupply of secondary offices. The vacancy rate has already risen from 4 to 9%, and I wouldn't be surprised if it ends up at about 15%. But I wouldn't think that landlords need to be too worried, because the upper parts in Soho, etc., will possibly convert to residential, which will be worth more. That's where they came from. So I can see Soho, Covent Garden, the City, and even Canary Wharf having an enormous amount of residential content so that we can work and live in the same place without massive commuting.
Yeah, I think that in the medium to long term, I can see, the market returning to more or less where it's been before, with the exception that I think flexible lease terms for the small to medium sized tenants are going to be essential going forward. I think that's here to stay. Flexibility is key. Certainly Cat A plus spaces, which are not only hassle free for tenants to move in, but save them on capex, initial capex going in as well. And actually are a benefit to landlords, because landlords re-inherit the premises fitted out and limit their void periods when they have to relet space. So it's a win-win for everyone. So I think in the medium to long term, we're still going to see 5-10 year leases, but perhaps with tenant-only break options after 2-3 years, which was happening anyway. So lease term flexibility. I do think that the quality of office space generally is going to be improved throughout. If there's this whole, the cost effective, what I call economical space, which existed previously, I don't think will always struggle to let going forward, especially with remote working here to stay. Because staff aren't going to want to come in to an office which is a worse environment to work in than their own home. So I think in the medium to long term, what's happened is good for the office market, because we're going to have much better quality buildings, and overall working lifestyles will be improved through that.
I think that's happened already. I mean, we can take a typical example being the quality residential lettings in Mayfair, St James's and the like, whereby most people take 1 year, maybe 2 year leases, all right, and the space is absolutely fully fitted. The tenant goes, you tosh it up and you relet it again. And I think that's where we're going to on offices, whereby the office market is going to be offered even by the largest landlords almost as hotel space. Tell us how long you want to take the space for. If you want to commit for 5 years, then it's one rent. But if you want 4 years, 3 years, 2 years, the rent goes up because the landlords have got more voids. So I think the landlords will keep their offices up to top standard, and any tenant who wants to let space will do the same. But there certainly will be some flexibility on the market. Probably somebody looking for offices at the moment on the other phone. I do apologise.
The only exception I'd say is in the larger market, the corporate market. It's pretty difficult for a landlord to speculatively fit out those spaces. So I think very much they'll remain Cat A stay, and they'll take it and do their own fit out. But certainly on anything, say up to 5,000 square feet or thereabouts, a lot of it will be fitted out by landlords, ready to go for tenants.
So we've sort of touched on flexibility and higher quality levels of office space, but what else might tenants be looking for as an essential requirement when they find their new space?
Andrew?
So, well, we've touched on a lot of that already, but so obviously, as we've said, quality and lease term flexibility is key. Other criteria, obviously location comes into it. We've got a lot of people, clients of ours, who are, they've had offices, for example, in the city. They're based in finance. They're now looking at taking smaller space, and now they can afford, because they're taking less of a footprint, they want to move into Mayfair, which is, a lot more expensive, but they can afford it now because they're downsizing. So I think location's obviously key. Connectivity is key. The truth is the main criteria is going to be quality and lease term flexibility, and obviously everyone will have their own budgets, and that is location driven.
I think one addition might be social space with regard to having their cafe. It's already happened. If you go into Collier's offices in George Street, for example, you've got their cafeteria on the ground floor, where a lot of meetings are actually handled over coffee, right, or over snacks and things like that. So I think the office is going to be a much more sociable place, rather than desks which are all lined up together, which people will be very worried about when they return to the office. And I think that on the initial return, social distancing is going to be a very important factor for anybody who's actually working out who's going to be in when. And that's where the 3-day week actually helps, because if you've got staff who are happy to work 3 days a week, you could effectively do 3 shifts. You could do a Monday, Tuesday, Wednesday shift, Tuesday, Wednesday, Thursday, Wednesday, Thursday, Friday, where everybody's in the office on Wednesday, possibly not at desks, but distancing themselves. And that will help. And also it will help the trains and the tubes and everything, because people are worried about, being packed into a train or a tube, even when we get up to 40 or 50 million vaccinations, and even when we think we're more or less COVID-free, because COVID is not going away. As we've already heard, we're going to have more jabs and more testing, etc. So it's going to be with us. And so for the first 6 months, I think it will be treading on ice, treading very carefully, and people. The most important thing is that the people who are making decisions to dispose of the market at the moment now are putting their premises on the market. And because there's so few people who have made those decisions, a lot of people are thinking about them. First come, first served with regard to letting your space.
I think that's going out there. Just to touch on one point which you brought up there, Tony, those buildings which offer communal areas outside of the demised leased area, are going to be those which are more attractive to tenants as well. For example, we're developing a building for a client in Piccadilly at the moment, and the basement, which is about 2,000 square feet, was formerly office space, bringing in income for the client. We've decided to completely transform that space into really high quality shower facilities, bike storage facilities, as well as creating about 1,000 square feet of lounge breakout bar area space, which tenants can use free of charge. So buildings which offer that little bit extra will also prove that much more attractive to all tenants.
Definitely, yeah. So what are the current market conditions, and what do you anticipate to see over the next 12 months?
I haven't got my crystal ball handy, so I'll use this, but it's certainly got grey or black paint on it at the moment. So current conditions are, to an extent, guesswork. The tenants who are disposing of their own space, I mentioned a transaction in Dover Street where we gave away 15 months rent-free in order to get rid of 8,000 square feet on a 7-year lease, which was higher than would have been in the previous market. We're expecting to take on another transaction in Mayfair where somebody's got 7,000 square feet on 2 floors. And again, we're advising them, unfortunately, it's only a 2.5-year lease. So we work with the landlord to say, they will give an extra 5. So you've got a choice of 2.5 or 5. But again, it has to be presented well. It has to be ready to move in. All right. And long term, I think we will have a crack in the office market. I'm a lot less optimistic than Andrew is. I really do believe that rents almost across the board, except for the top quality, may well go down by 15 to 20%. If the rents are held up as headline rents, then the rent-free periods extend by 15 to 20%. But I think it will be difficult to shift space. And the most advantageous tenants are the tenants who have got break clauses or lease expiries. And even if they want to stay in their accommodation, we've got a client in St James's Street at the moment who's got 2 floors, probably going down to 1. But when we started showing them what was available in the market, they're not so sure that they want to renew with the landlord. And so you play both transactions, whichever looks like the better deal at the end of the day is the one to take. So landlords, beware of break clauses, beware of lease expiries, hold on to your tenants if you can, stretch out the terms to keep them, because a tripartite relationship between tenant, landlord and banker, if you can keep everything together and possibly give the tenant a bit of coronavirus help on the way, relationship is everything.
Yeah, I mean, my view is, yeah, like Tony said, slightly more optimistic, particularly in the West End. We've always been short of office supply, particularly that of quality space. And whilst demand has reduced over the last 9 months, supply hasn't yet increased substantially. And because there's going to be a lot of people who no longer in offices which are fit for purpose, they're still going to be moving elsewhere. So demand is going to keep up, in my opinion, with supply to some degree. I do think that, you know, there will be some situations where tenants are stuck with space just because what they have is perhaps not going to be desirable in the current marketplace. But overall, I think supply, yes, inevitably will increase as and when businesses are making decisions on their occupational needs. But I think simultaneously, demand, well, we're already experiencing it. You know, we're getting viewing requests. You know, they've increased probably 300% compared to January over the last 6 to 8 weeks. So, you know, there is a lot more activity and a lot more demand filtering through to the market. So I do think in the West End in particular, there's going to be you know, I think rents are fairly stable. Rent-free periods have gone up. There's no doubt in that. We're now getting 9 to 12 months rent-free at least over 5-year leases, whereas before it was closer to 6. So arguably rents have fallen 5 to 10% already when you take into account the incentives available when you're taking a lease. But I do think that, you know, the market will stabilise and find itself by the end of the year, assuming we don't have any more lockdowns, of course. And I think rents in the West End will hold up. The city, however, supply is pretty high at the moment. We did a search for a client the other day and ended up for about 2,500 square feet and ended up with about 50 different options. Obviously, not all of them were suitable, but previously you might have had 12 to 15. So the city's a different ball game, and there are some fantastic deals there. And I do think rents will reduce over that way. I think Mayfair and surrounds is fairly safe from a value perspective.
If I can add one other thing, I'm not worried. Forecasting forward 3 years, I'm not worried. And property is a long-term game, especially for landlords who are holding their properties. I'm not worried about the future of the office market in central London. We had the wonderful communication between America and the Far East with regard to our timing for the stock exchanges. We've got insurance, which is all over the world through Lloyd's. We've got our lawyers all over the world, etc. London is one of the best places to live, work and play. And we also speak English, which is the most common language, which is enormously advantageous. And I think the important thing long term is that the secondary offices are the offices which will get into difficulty because they won't be front of the queue and they will be repositioned to residential quite profitably for landlords in some cases. And the government have already told the planners that they need more housing, all right? And we've also had the change in the use classes order, which has made it a slight free-for-all anymore with regard to what you use premises for, as long as it's not objectionable to neighbours, etc. And under those circumstances, the office to residential market will be incredibly strong, and that will take the surplus supply out of the offices, and then rents will rise again. So I do think that this is not a very long-term blip on the office market. I think it's a 2-year blip or thereabouts, where there will be very substantial oversupply, but that will get taken up either by people taking the premises, or alternatively by change of use.
Remember, we've got, due to Brexit and other external reasons, we've got many businesses from Europe who are needing to base themselves in London. So there is a lot of I think I read an article a few months back where it said 1,000 financial Irish companies were having to open up offices over here. So that alone is going to help with demand and increase demand and keep it in line with supply as well.
Yeah, we didn't mention the other office market because there might be some people who have got offices all over the country. Decentralisation seems to be very high on people's agendas, that they can almost use the octopus effect, whereby they've got the octopus in central London, the body of it, and then they move their offices to people who are working from home to have local offices in, say, Winchester or Bristol or not even main towns. But I think that and it has already been appointed that have reported that the co-working firms are seeing a lot of demand, all right, for offices which are outside the M25, where people don't want to commute in anymore. They work from home 3 days a week, and they go to their local office for the other 2 days a week, which would be enormous savings on rent, etc., because it's much cheaper, not only in terms of rent but also rates. And so I think that we're going to have much more decentralisation as well.
Yeah, that's also another trend, definitely, that's happening at the moment. We've got a client, a firm of traders in the city we represent, who have decided they've got about 7,000 square feet. They're going to take a 2,500 square foot office in Mayfair, and they're going to take an office in East London, West London, and also one in Essex, where the partners are from. So they'll have a client-facing office in Mayfair, and then the rest of them will be back of house and more local for people to avoid the commute into town if they don't need to be there.
All right. So many tenants are tied into leases on existing premises, which they no longer need. So what are their options in connection with offloading this surplus space and their associated lease commitments?
Well, number one objective is to move out on a Friday afternoon and move into your new premises on a Monday morning. You've got all the usual methods. You've got the subletting, right? Even staying in your existing office and subletting surplus space is a way in which you avoid the actual overall move. All right, so subletting the whole or part, assigning, surrendering, and surrender of the lease is when we're advising tenants, we always want them to surrender because of the necessity of an ARGA. If you're assigning, then you've got to give an authorised guarantee agreement on the assignee, and if you're subletting, you've got the dangers of your tenant going bust. So you're becoming a property owner by subletting or assigning. So surrender is the best. But what we try and do is we try and line up a tenant, especially when we've got a short lease. Let's say we've got 2,500 square feet just off Curzon Street coming up, and it's 6,000 square feet, and it's only on 2.5 years or thereabouts. Speak to the landlords, find out that in principle, if you find a new tenant for them, they'll take a surrender of the existing space. The existing tenant can always make up the difference by paying them a quarterly rent, which tops them up to what they have, and they've already got their new tenant on the reversionary lease when the space would have come back to them. So surrender is the absolute ideal. Then assignment, obviously making sure that the company is safe to assign to, and also drip feeding them the capital sum rather than giving a massive premium and then suddenly finding you getting your space back again. Subletting the whole, subletting part, and anything Andrew wants to offer, which I've probably missed.
Well, you haven't missed anything. That's exactly the three options that a tenant has when they've got a lease they're tied into that they don't want anymore. I think when we're advising clients at the moment, you've got to be pragmatic in your budget for disposal. It's not, you're not going to get out cost free. It's just not going to happen right now. You're likely possibly slightly over rented, but either way, it all comes down to how long's left on your lease, what rent you're currently paying, and then we can work out whether that's over rented and by how much. We can work out how much rent free based on the unexpired term a tenant will expect, and then we can work out what your end of term dilapidations liability will be, because most tenants will have an obligation to return it to open plan and in good repair. And then once we've worked that all out, we can show a tenant really realistically how much it's going to cost them, and how much they should be prepared to pay a tenant to get out. And of course, the key is timing. If you're tied into a lease and you've got 2.5 years remaining, each quarter that goes by is not only costing you money, but it's reducing your chances of actually finding a tenant to take the space, because the shorter the term gets, the less attractive it is. And you'd much rather pay a larger premium now to get out of your lease than having to pay a similarly large premium in 6 months' time. So it's all about mitigation.
And by the time you add on rates on, if you look at your overall vacant space provision on the 2.5-year lease, you're still having to pay the rates, even if you're not emptying occupying the property and the rent. You need to get about 12% more every quarter, all right, to actually justify not disposing this quarter, all right? So when Andrew mentions pragmatic, if you've got a tenant for your space, you need to close a deal. You might not find another one for another 3 months, 6 months, and then it's going to be impossible to dispose of the space when you've only got 1.5 years left. All right, so time is really of the essence, and aggressive marketing campaigns, offer at good value, realize that your lease is jeopardizing the disposal, and market accordingly.
Yeah, I just want to add, it's slightly going off topic slightly, but I saw a question come in. For those tenants that are quite happy with what they've got with 2.5 years or so remaining, now is a good time to approach your landlord if you're in a position to say extend it for 5 years or thereabouts, because landlords will welcome the secure, the added term of secure income and pay you quite handsomely to do so, most of them. So rather than wait until you're expiring and get a market deal in what was likely to be quite a strong market, you're better off taking advantage now and seeing if there is an appetite from them to extend now and give you a rent-free period for doing so.
And I'll go off the subject again. We've been handling about 80 coronavirus negotiations permanently, not only for tenants, but also for landlords trying to get rent in and helping their tenants out with regard to the fact that they haven't used their offices for a year. And on those coronavirus negotiations, it's quite common to get a 6 months rent-free period, and we'll put an extra year on the lease so that the landlord only gets it back when he might be in a better market, or to re-gear the lease where you've got 2.5 years left. You know you want your offices, you give them an extra 5 years on the lease, and they can not only help you out of the coronavirus rent-free, which you're asking for, but also a capital sum for improving their investment value.
Yeah.
All right, well, you both just stressed the importance of timing. My next question was going to be, is now the best time to get rid of this surplus space? But
Absolutely. Not for us, but for anybody who's thinking of relocating, right? You don't have to do it, but it's worth going through the exercise of looking what it would look like today, and then you can make your decisions further down the line. You need to know what your staff numbers are going to be, what you would need, what you've got at the moment. We could then look at your space, advise you as to how best to get it on the market to attract the maximum interest. And again, we get back to lining up the transactions simultaneously. It's a brave man who moves out of his offices and takes his new space before he's got any interest on his existing commitment. And we would advise that that's unwise.
Yeah, I think with an anticipation that there is going to be a lot of grey space coming up when businesses decide to downsize or whatever it should be. Right now, that's not the case. So it's an opportune time to put it on the market and try and catch some early demand and deal with the problem before it becomes a bigger problem.
So you both briefly touched on budgeting with this disposal costs, but do you have any further advice to clients with in case of purchasing for disposal?
No, I think that's it. I think we can put. I think we've put enough meat on the bone to put it out to those that are listening to fire questions, and then we'll go on to other subjects with our answers. And I hope we have a lively debate, because that's what I'm looking forward to.
Yeah, well, we could have a look at the questions. Andrew, did you say that you can see the questions, or shall I?
I saw some questions popping up, but I don't know. I can't see them now. Do you want to run through them?
Yeah, why not? Let's do some questions. All right. One question I actually have here is, are you finding that there are some industry sectors which have more downsizing than others at the moment?
Yes, definitely. The industry sectors that are in the most trouble, and we've done an enormous amount of work on this, is the leisure market. You've only got to turn on the news of pubs, bars, restaurants, casinos, gyms, etc. Any businesses which are based on people going to them have had the obvious effects of a year when they've only turned over at the maximum 2 months turnover, and that was restricted by social distancing, curfews, 10 o'clock curfews, etc. And that downsize will be enormous. I see a lot of problems in that, but that's for another webinar. So those industries, the warehousing market has done extremely well because of the amount of deliveries that we're all having to our homes. People like the Amazons and things, the dark kitchens have done really well. But if we just stick to offices, what industries have got into trouble? Anybody who's involved in those industries of the leisure market, anybody who's been badly affected by leaving the EU, obviously, because we've put that aside to an extent, and it has had an effect on a lot of businesses, and mezzanine financiers and things like that who have financed mezzanine debt on property have got some troubles, obviously, with regard to their loan to value is not looking as clever as it used to. All right, so there are industries that are going to suffer. The technology side seems to be expanding all over the place. The tech industries are expanding. The lawyers are committing to pre-lets, especially on large space. I don't think the very big market has been that affected if you're looking for 100, 200, 300,000 square feet. But as Andrew mentioned, the smaller companies, a lot of our clients have suffered, unfortunately. And across the board, not many of our clients have really had a bumper year. I think you'd agree with that, Andrew, wouldn't you?
Yeah, I think I'd point out that downsizing is not necessarily because a business is doing badly at the moment. It's to do with, okay, it saves some costs, but they're actually going to be paying, in the majority of cases, higher rents for a smaller but better quality office. So they're not necessarily reducing their property outgoings by moving. They're changing the environment they're working in, a lot of our clients, and that's what we're experiencing across the board. So it's not necessarily the industries which are struggling, which are downsizing to save costs. It's downsizing to better quality offices. So it's difficult to say which industries in particular are downsizing. For us, it's across the board, and a lot of our clients are in recruitment, we act for lawyers, recruitment, finance, traders. We act for tenants in every sector. We act for fashion companies. It's really a matter of businesses, whether they're large businesses or small businesses, understanding how much space they need based on their staff advising them that they prefer to work from home 3 days a week or however it is. And yet, it's a new world for everyone. So it's very difficult for businesses to make this decision long term at the moment, which brings me back to the reason why landlords are going to have to be open on granting flexible lease terms, which was becoming the case anyway. So the downsizing is not linked to any specific sector. It's really the new working world we're going into, and that's the trend is downsize because people feel they need less space because there will be more hot desking. It will be more innovative, collaborative areas that people are coming into in the office as opposed to a physical desk space which they're at all day long.
Yeah, fair point. Right, I'm just having a look through. I think some of these questions have come in over the course of the discussion. We've then gone on to answer them. So where in London may you see more space available and planning approved for residential, such as student accommodation or similar?
Sounds like a developer. All the normal places. I mean, you know, if you look at Stanhope's White City development, that was incredibly innovative with regard to attracting people to the west of London. I think southeast London, south of the river, the box where you won't see enormous amount of development because it's all taken already, is the box between effectively Park Lane to the Park Lane or the other side of Hyde Park to the west, the city to the east, Marylebone Road, including obviously King's Cross, which is a new addition to it, Marylebone Road to the north, and the river to the south, and that's the real central London market where you won't see that. But outside those areas, Shepherd's Bush would be one of my favourite places to do a development terribly close to central London. You and I are doing a massive development in Notting Hill, all right, which is a typical example. So you've got to spread out from the centre. I think Crossrail is going to be important as well. If I was a developer looking to find sites and older buildings, I'd be circling the Crossrail stations and being quite close to them because they're going to be so close to Bond Street Station and Hanover Square in bang slap in the middle of Mayfair, and even to get to the city, Canary Wharf, etc. So we've got to take into consideration the Crossrail effect. And on the retail side, if I was looking, I'd be following the trend of traffic coming out of the Crossrail trains for where footfall is going to improve. So I hope that's answered the question. And if the gentleman or lady's got another question, fire it at us, and we'd be very happy to answer.
All right, next one. Is it a regulatory requirement for financial service companies to have a physical office?
Oh, that's a trick question. The answer is probably yes, because somebody knows the answer. The answer is I don't know. I
don't know if it's a necessity. It probably is under FCA regulations, but the experience I haven't. Obviously, we're already acting for financial companies who have physical space or are looking for physical space. So it's not a question, not something I know, if I'm totally honest. I'm not sure if it's a...
Can I cut short? We'll find out the answer if the gentleman or lady wants to contact us. I do not know the answer.
Right. When negotiating a new lease with a landlord, how does a tenant get peace of mind regarding future dilapidation commitments?
That's very important, and it's one that we hadn't touched on. I am a director, and I started a company called Dilapidation UK, which specialises in acting for landlords and tenants on dilapidations claims, and we're the second largest. We're basically the second largest in the country now. Number one, when you look at your VSP, your vacant space provision, you've got your rent, you've got your rates, you've got your insurance, you've got your service charges going out. Those are all known, but dilapidations is very unknown. When you enter accommodation as a tenant, you should do what's called a schedule of condition, which says you don't put the premises in any better condition than exists at the moment. All right, and then that's your liability when you go out. But what we tend to do is we tend to introduce Dilapidation UK really early to our clients to say, let's do an assessment of the parameters, not what the landlord will claim, but what the landlord will be entitled to. And the landlord is entitled at the end of a lease to make you put the premises back in their original specification. If you've got a license for alterations, then you'll have a reinstatement obligation, which the landlord can insist on, even if it doesn't do him any good. But the one valuable thing is that the dilapidations can all go out of the window if the landlord's going to substantially refurbish or reconstruct. because there's no point in putting Humpty Dumpty back together again if he's going to create something completely different. So we've done it quite a lot. We did it in St James's Square with a client recently who had 4,000 square feet of top quality offices, assessed the dilapidations up front. They then decided to move early, agreed with the landlords that we would pay the dilapidations in order to exit. So the dilapidations can be assessed quite accurately. The only unknown being what the landlord's going to, which could only be better for a tenant. The only unknown is whether the landlords will relet the premises in that specification once you've moved, or whether he's going to improve it. If he's going to improve it, it can only be betterment for you, because a landlord can't claim dilapidations. His dilapidations is capped at the damage which you've caused him by the way in which you've left the premises. So if you leave a warehouse with graffiti all over the walls, it doesn't make much difference to a bulldozer whether it's decorated or not.
Yeah, I just add, when taking a lease as well, obviously if it's a brand new refurbished space, then you know, the landlord will want standard dilapidations provisions in. But more often than not, at the moment, you're taking on space which is currently fitted or has some element of fit out in place. So what we agree is a photographic version of condition, whereby that evidence is the condition you've taken the space in, and that is the condition that you are to return it in, or at least no better condition than that condition. And in some cases, I'm doing a deal at the moment in Mayfair where we're taking on a secondary space of 5,000 feet, and we've just simply agreed that we can return it in the same configuration in a broom swept condition. Because essentially the landlord's not refurbished it and we're going to be doing all the work. So we've just said, fine, well, but we want no dilapidations liability, and it's been accepted. So it's important for all tenants when they're taking space to bear in mind, you know, it might be 5 years down the line, but it's a cost that you need to consider now and protect yourself against in advance.
Avoiding dilapidations on acquisition is better than dealing with dilapidations on expiry.
Well, someone's asked, what about dilapidations when the landlord will want to completely change the office configuration when the tenant has left?
Well, that's one which I've just touched on. It's very, very complicated. Landlords will never tell you. All right, and I wouldn't tell a tenant if I was a landlord that there's a development schedule. So you've got to investigate planning apps, pre-apps, etc., to try and find out what the landlord's going to do if he tells you that he wants to put Humpty Dumpty back together again. If your lease is inside the act, the landlord will probably owe you compensation, once rateable value if it's under 14 years and twice rateable value over 14 years, but he may well go for dilapidations and reinstatement. Reinstatement is something which a landlord is entitled to, right, ask you to do, even if he is not renewing your lease, and even if he is going to change the space radically. Dilapidations are capped on the landlord's damage to his reversion. So what you do is you value the freehold of the building as if you had done your works. You then value the freehold of the building with the works as they are presented when you've left your space. You don't have to do the dilapidations. And then the difference between the two is the maximum damages claim which the landlord can seek from you. And those valuations are quite rare. There's only about 7 or 8 valuers who specialize in it in the central London market. But diminution of value is a very important part. So if you suspect that your landlord's going to do something else with the property once you've left it, please take advice.
Complex negotiation, I think.
Extremely complex, but I do know I can explain it.
Any tenant facing a fairly significant claim needs to take professional advice on it and instruct a dilapidation surveyor to handle it for them.
I think any tenant who is actually moving out of his premises, even before he gets a claim, should take dilapidations advice. It's extremely important, and it can be very, very big numbers indeed.
Okay. I think just briefly touching back to the financial service question we had a few moments ago, someone has just said that they do have to have a UK office if they're regulated by the FCA. just in case anyone wanted to know that.
Yeah, but the question which was asked was, do you have to have a physical office? All right, and the physical office, I'm not sure you need that. I've got a feeling you can have an office at your accountant's office without having a physical office, but I'm not sure. So I still don't know what the answer is, whether it's physical or not.
Yeah.
No, Philip Holmes told us that, Tony. He knows. So he said they need a physical office. It's good to know.
Philip Almer, for everybody's knowledge, specialises in all compliance, legal compliance obligations. So he would know. And so yes, you do need a physical office if Philip Almer has said so.
Okay. I think this may actually be one of the last questions we've got to get through. How can you find out which office spaces are? How can you find out which office spaces rents are VAT free?
How can you find out?
You asked, the answer is most buildings in London are VAT elected for various reasons, which I won't go into now. But the answer is you just got to ask the agents if they haven't stated it on details or information, you just got to ask the agents whether it's VAT registered or not. And remember, I believe it can be VAT registered once you've taken a lease as well. So you've got to sort of.
I would add on that there are some leases, especially with people who can't reclaim their VAT, who agree with the landlords at the commencement of the lease, all right, that they won't VAT register while they're in occupation. There are a lot of businesses who can't reclaim the VAT, and they don't want to go into VAT rated buildings, and therefore a landlord who wants them as a tenant should also agree that they will not agree to VAT register the building for VAT during their tenancy.
Majority of buildings are registered, but there are a few that aren't. But I'd say over 90% are registered that I come across anyway.
Right, I do believe that is the last.
And please, if I could make a plea to everybody online, if you've got any further questions which come up, we're at the other end of a phone, we're at the other end of an email. Please pose them to us and we'll be delighted to help you. If you're looking for offices, please have a chat with us. If you're thinking of disposing, please have a chat. And there will be further webinars because we wanted to get this initial webinar on offices, on the state of the office market out early. And if you're interested in joining further webinars, number one, just register your interest. And number two, they'll be on all sorts of different subjects. And if you watch our website and if you're on our mailing list, then we're delighted to work with you. We learn from you when we're answering the questions. I've had a good time and I hope you've enjoyed it as well.
As we said at the beginning, it will be on demand for anyone who wants to view it. We can send that out to anyone who's registered, and please feel free to share it with any of your friends or colleagues that might find it interesting.
Lovely. Andrew, your last words?
No, I think you covered everything. Here at the end of the phone if anyone needs us.
Lovely. And good afternoon, a belated happy Easter, and let's get back to work.
All right, thank you both.
Okay, super. Thanks. Bye-bye.